Man, at last, has succeeded in penetrating further and further into the unknown vastness of space.
Gentlemen in the mix.
Hey, Trita, sorry about that. Another technical difficulty. I have never had this many technical difficulties in the history of live streaming. It just happens to fall on 8/28/2024. Earnings will be reported in the next 17 minutes. You're looking at Nvidia on like the 5-minute chart. The gray is after hours trading. The black is during the market open. Let me know if you can hear me. Hopefully loud and clear. This is insane. Everything's been screwed up. Just about. So please use a little bit of empathy on me right now, because this is the most frustrating day possibly in my streaming career. So yeah, Bitcoin was selling off, and then if you don't know, intraday, Nvidia started rallying, and it's crazy that Bitcoin kind of rallied with it, but market closed, stock market closed, Bitcoin 4-hour candle closed, and you're fine. You're actually still just holding above 58K. Another test today, but no harm, no foul yet, really. Until you're breaking 57.533, you're okay. I mean, that's the line in the sand. Like, no one can be out there being like, you were bearish, you were bullish. I'm neither. I'm just saying I know the levels, and if we break 57.5, we're going to 52, most likely. But we haven't done that yet. Not yet. We're just sitting there. We've been spending 4, 8, 12, 16, 20, 24 hours now testing 58.3. So we can look at that more, but this is the Nvidia watch party stream where all you want to see is this chart right here, because this is going to make or break everything, the whole market. So I had a poll, but you know, this is what happens in the middle of my whole stream got screwed, dude. I had to create a new stream. The poll's gone. I don't even know, man. It's completely foobarred. And I didn't do anything wrong. It's just, this is how it works sometimes with technology. My charts, my report, and there you go, man. What's going on with that? Okay, so we can see that if we're just looking at the daily here and not looking at the 5-minute chart, the structure is a completed shark. One peak, the second peak, the third peak, 886. This was an 886. This was also an 886 retrace from the previous high to low. So the rule of 3, I would say that resolution's coming in the next 15 minutes. So we're probably going to be at 140 plus, or we're going to be at 100. One of the highest implied volatilities ever in the history of Nvidia, and I think it's about 10%. So let's just measure. So if like glory strikes again, which I would never rule this out as a possibility, because this seems like the most stupid thing ever to occur. Okay, so if it goes up 10% on a good earnings, because it's probably going to beat earnings. We know that. It's just we don't know how the market's going to react to them beating earnings, because they're not going to not beat. So 10% up would be
Technology.
138,
Is it good or is it
36. Good to see. Out of restart my computer a million times and updating Stream Deck that it is still broken. Fantastic, man. I don't know.
Technology, what is that all about? Is it good or is it whack?
All right, so 10% on the upsides, 138. I'll make this like a green line so we can just see. And on the bottom side, if say things go bad, like they report and they beat earnings and everything's good, but still it's not good enough because the market expected that, then you're looking at 112. That's a 10% move one way or another. That's the IV. Could be 11, so a little bit lower, a little bit higher, give or take. These are your target areas. If there's not an IV crush would just be like in between these levels, like where nothing happens, the nothing burger occurs. So yeah, everything seems okay. All right. It's the watch party, chat. We're here. We're congregating on a Wednesday at 4 p.m. plus Eastern, awaiting, again, the most important earnings. Some are saying in a decade. We're about to find out. We really, really are. And we'll keep our eye between this chart here and this chart, which is going to show you the actual price action and not my ugly face. So it's a win-win. Just trying to drink my coffee. Just trying to get my nerves settled down, man. I'm telling you, I was not raging, but I was a little vexed at the technology issues. It was certainly whack today. Yeah, the gym's opening back up, but like another day, I haven't been able to do anything. Haven't been able to use my gym. It's so stupid, frustrating. But yeah, I mean, like that's kind of, this is why we're here. This is the chart. All right, we have, they say they report at 420. We're gonna see what happens. We can maybe look at the Mag 7 while we wait. You know, Mag 7 on the other screen, and I will keep you apprised to the Nvidia situation. We got about 10 minutes till they report, apparently. But here's Tesla. I don't know why we start with Tesla, just because. Well, yeah, whatever. We looked at Nvidia. That was the worst performer of the day for the Magnificent 7, and this is the second worst. And this is Tesla testing the 200-day simple moving average for the first time since the 14th, and then just closing right at the historical inflection point. Remember that one time it was resistance and reversed violently? There was a time that it was support a couple times. Look, November. Look what happened when they... Look what happened, dude, for real. In a downtrend, too, like a well-established, undeniable bear trend. Tesla market participants recaptured that level, then they back-tested it formally as support. And what happened after that event occurred? Let's just say with the close on the successful test, you had another run up 23.5% in 48 days. So here we are at the same level. If you care about Tesla, you would be praying to God that Tesla buyers would come in tomorrow and in the coming days. And that's probably going to, you probably need Nvidia to have a really good earnings and a good response, like the free market bidding after hours, and a fat green Jesus candle. 130 plus. So a little price action, not really. I mean, the little rally you got earlier with Bitcoin is gone now after hours. But again, none of this matters. Like the moves up and down today, none of this mattered either. Why is it falling? It's just oscillating, man. You cannot care about any after hours trading because it's going down, and then earnings reports, and it's good, and you're up. You're at 130 plus, 140 plus in seconds after that report, so I wouldn't worry about it. So don't freak out, man. Anyway, I was just looking at Tesla because it was the second worst performer. Let's just pray that this level is defended and they hold on to it, and there could be some really nice consequences, positive consequences that they do defend it. But it's resistance, support. It's been support before. Even here in the woeful bear trend, it was crashing in 2022. They still defended it a couple times and got a little rally before going lower because the trend was awful. But look, do you get how real it is? And unfortunately, falling below that, I mean, there's just not much there besides the demand line. If you're talking about horizontally, it's 182 and 205. That's about it. So down after hours, 0.49%.
Long to midterm analysis under John Deere.
He went to Jared. What's up, Jared, man? We can look at John Deere. Yeah. We will look. Shout out. He went to Jared to get his John Deere tractor. Jared Deere. I'd buy it. Okay, Amazon down 1.3%. Gross, man. They filled the gap with a wick. You see that wick? Filled this wick. And then big bearish engulfing candle back below the key inflection point of 177.70. And I'm talking, I don't plot these levels lightly. This is such a stupidly important level. 188 was real as F2. It's just like they are equally as important, 188 to 177. So they have now rejected that level formally. And what does history tell us about Amazon? What does it normally do if it rejects that level? It minimum goes down to 159. And then worst case, it goes from there to 144. Oh, what's up with the 88s, the 77s, the 44s? We got a possibly autistic composite operator on Amazon. I don't know. Just kidding. Like, let me kid. Let me joke. Can I not joke, dude? All right. So maybe, you know, 157.77. I don't know. Or 155.55. But that seems like the next level on deck for Amazon if things really don't get going for it. And there's nothing indicating that things are going to get going for it. In fact, there's hidden bearish divergence on the freaking MACD histogram right here. That's awful. That's implying downside. You're getting it. It's a 5-day losing streak. And guess what? Your RSI, even your RSI was giving us hidden bearish divergence. But this happens when you V-shape like this, when you just recover randomly without an edge. Yeah, that typically happens. The oscillators reset, bearish stuff comes in, and then you get a second test eventually. So just checking back on Nvidia, just because I know this is the watch party, man. We're going to be watching it, trying to analyze other assets while doing it. Just for this, it's just a value thing. Like, hey, man, I'm watching the stream, and I'm getting value out. And now I know about Amazon. Okay, now I know about Tesla. Now I know about maybe Google. Google looks awful. Like, good, dude, I don't know what to tell you, man. Google's like, is that a bear flag? We joked about it yesterday. That looks like bearish consolidation. Like, because everything, all these other assets had these significant reversals, and then you've just got Google that didn't do anything. You had a bad earnings report, and you've just been breaking down, and now it's just like no one's buying. And it all ended with a magnesium-laden shooting star reversal. That's still extremely active as a bearish reversal. Magnesium-laden because it's green. I don't make the rules. That's physics. Only some of y'all get that. Y'all the real ones. So bear pull, bear flag on Google, then fine. 150, 146. Fine. Just gross though. Microsoft. You're just at a point where as a swing trader, am I not always looking for a form of confirmation? And we don't have any here. So if there's no forms of confirmation, then there's nothing really to do but wait. You're just at the casino. You flip your coin, then it goes up next. You flip your coin, it goes down. But it would be just like, wouldn't it be better to see like buyers try to defend a level? And it's like, look, you certainly have. I mean, undeniable. Like, this is the all-time high on Microsoft on the on like price, but the histogram looked like this, and now you have a ridiculously lower high, and there it is, implied continuation downward on Microsoft on the daily. I can't help it, man. It's just happening. So Apple down 0.8%. Yeah, dude, flip your freaking coins. At least it's not showing like undeniable hidden bearish divergence, more like bearish convergence. But just there was nothing really to do besides scalp, and then now you're up here, and it's like, if I was down here and I bought and you're up here just stagnating like this, it's like, dang, man. Will we get the gap fill? Because that's the target, I guess, 234, if good stuff happens on Nvidia. If Nvidia's going to drive this market down, I mean, like, Apple be going to 220 if you have a bad earnings report on Nvidia, but you might actually fill the gap at 234 on Apple if Nvidia has a good earnings and we go up to 140, you know. Coral Creed, I'm not sure if that's the highest high. I mean, like, it is a peak, but I don't know if you would call it in the head and shoulders yet. I would just say, like, locally, it's a much lower high than the previous high, and it is implied on the daily oscillator. Continuation downward next. I don't really want to go beyond that and start calling them patterns and structures yet. You don't really need to. Not necessary. And then the asset that lost the least amount of value today was Meta. But dang, man, we might be screwed here. They better be getting the price back above 531 real fast, otherwise max downside. It's just going to do what it's done historically, which is what? Straight up, straight down, straight up, straight down, over and over and over again. 454 to 530. Man bun double top. He's about to walk in the stream. He's going to say it. Double tap. There. Come on, man. Why are we failing a second time to break the key level? And we are like, we got follow through. You got a actual formal bearish back test yesterday, and you're just sitting here and you're down after hours. You were down 0.45%, but after hours you're down 0.5%. So, okay, see, people are like, why is it selling off? Because it's no volume and it's leading up to the earnings report. So we'll be getting that earnings report very, very soon. So just wait for a crazy green or red candle one way or another, and it might start really bad, and then it could end up really good. Actually, if you remember the last earnings report on Nvidia, it dropped like a lot for probably 5 seconds and then just God candle. So I'm going to try to keep up with it when it does report. Let's see here if we get any sort of update. Oh, there it is. Nvidia smashes earnings. EPS 270 versus expected 2.09. Revenues 10.32 billion, up 171% year over year. Key driver: surging demand for AI chips like the A100, the H100. That was 2 seconds ago. The Reddit Wall Street Bets earnings thread crashed, apparently. Too much mania. So it looks like TRD, who you talking to, dude? You talking to chat or something? So there it is, man. See what I'm talking about? Price action is nuts. It could be like this, and then it's up 140. You cannot see what I'm saying? Like, yep, here we go, 140 or 130. Type in the chat. Oh, 122.62 at the lows of the after-hours session. Yep. I mean, EPS, they beat. Expectations were 64 cents. Their EPS was 68 cents. Revenue of 30 billion, beating expectations of 28.7 billion. So we have a top to bottom beat on Nvidia, chat. Guidance will be probably the mover right at this point. Yep, top to bottom beat. Hype in the chat. Hype in the chat. But when God candle, because last earnings, it was like insta. It was like as soon as those numbers came out, it was like dump, pump, gone. And now we are just trading like the report didn't even come out yet. I mean, don't tell me it's something like... I don't even know, dude. Wow, this sucks. On my stream deck, it's just effed. Yeah, I don't even know. Yep, 122.56 was the lows, but as you can see, 127. It is volatile, but it is pinned. It is not really going anywhere right now. Chat.
Is that a joint?
So possibly implied volatility, a volatility crush, man. So people with calls and puts losing. Bitcoin is up 0.14% on the day, trying to rally off the lows. Bitcoin off its lows of the day, currently 2.77%. So kind of moving, but not really with Nvidia. I mean, it's just doing its own thing. So everyone loses. Not the iron condors. Right, the people who have iron condor strategies with their contracts make money when the price doesn't go anywhere. Interestingly enough. What's up, Batson? Lion, Savage Commentary, Track, Hot Tails, Tua, Cactus Leo, Rob. Hello, chat. Good to see y'all. Sorry, it's been kind of crazy here, man. Should have been live like a lot earlier, but I just couldn't. I did everything I could, man. All right, so don't know if this is real yet. We just don't know. But yep, so far now at lows of day, Nvidia is currently trading at its lowest lows in possibly a week. Let's try to scale out and see. When's the last time Nvidia? This is a five days. Yep. So in the past 5 days, you've never been this low, and we're flushing. Nvidia is flushing, chat, down to 121, 120.80. 120.54 lows. Type in the chat. 120.36. New lows, new lows, new lows. Well, this and Bitcoin, right? Getting driven by this as all those moves on Bitcoin gone. The Mag 7 are so yeah. Nvidia's down 5+% after hours. Currently, okay, so number go down. How are the Magnificent 7 responding? Tesla is down over 1% now after hours. Amazon's down 0.7% after hours. Google's down 0.45% after hours. Microsoft only down 0.27%. Apple down 0.15%. And Meta is down 0.62%. So they're obviously catching some flack here, some shrapnel, because this is the 116.22. Currently, Nvidia is down 7.22% after hours. So the puts getting paid, not the iron condors, not the calls, man. Type in the chat for price action as we continue to stumble lower. 115.18 and falling. Chat, are you there? Can you hear me? Oh my God, dude, it's freaking out, man. Thanks for the 900 people tuned in. Unfortunately, it was not like last earnings, but it's not over, dude. You just don't know. Like, Jensen Huang could come in on the conference call and be like, hey, I'm dating an Olympian swimmer, and we're producing genetically superior offspring that will run Nvidia when he comes of age, you know, like whatever. We could have an Nvidia Prince, and then it just pumps to 150, right? So don't fret. We have volatility. It's only down 5% now. It was down over 7+% earlier, moments ago. Jensen just might announce that they're acquiring Denny's. As you know, that was Jensen Huang's first job. A dishwasher working at Denny's. See? Hey, what are you worried about? Everything is beautiful. We're okay, man. We could be right back at 128 in seconds. Just calm down. Well, I mean, when it's after hours, dude, who is trading this after hours, man? It's like you're taking your position pre-market and you're praying, you're flipping your coins. What are you doing after hours? Doing stuff. Only down 2.7% now. So the iron condors are back, man. Yeah, dude. Like, what are they gonna do? They're gonna make this thing really dump. Yeah, right, man. Nancy Pelosi, you got everyone in the entire world at stake here. Like, you can't let this thing crash. Give me a break. And as you can see right here on the Nvidia daily chart, where we can only see the price action with a blue line, it's nothing. It's legit like nothing happened, and Nothing Burger is winning the poll right now. No mega pump, no mega dump, Nothing Burger. It's Nothing Burger unless you have, like, for real, when all this volatility settles, conference call-ins, whatever, anything 5% or lower is Nothing Burger. On something like Nvidia, so anything like, if you on the poll you were like mega pump, mega dump, that means like greater than a 5% loss or gain. So currently the Nothing Burgers have it only down 3.19%. but very, very volatile. But it would be so appropriate. I mean, it really would be so appropriate if Nvidia reversed to the downside here, because it'd be your third peak, which would signify classic distribution, and it's an ungodly shark pattern. And it's like, who are you to like not believe in bearish sharks when the most recent significant bearish shark that was identified here was the Bitcoin bearish shark that was perfect at 6970K, and it was one of the fastest crashes in the history of Bitcoin. So the shark prophesized the crash. We didn't know, but it just increased our probability that we were going lower. So yeah, make all the sense in the world for a drawdown because of the bearish harmonic, and it's the third peak. So value perceived area for a short, but the shorts aren't really getting paid, man. Not at all. Only down 2.75%. That's nothing. Sorry, still just drinking my super expensive coffee, right? My Irwin coffee. You know, if you don't know, coffee futures just going nuts. I think multi-year highs on coffee futures. So how about those other semis? Let's talk about it as we continue to just monitor the 5-minute chart on Nvidia. You know, everyone's been anticipating. Let's just talk about how the altcoin, or not the altcoins. Well, I guess they're the altcoins of the semis, right? Okay, so super microcomputer, if you don't know, got devastated today. It was down 19%. I think something about fraud or whatever, but it is down 3.79% after hours. So we're talking, 23% down on the day on super microcomputer, and that was the lowest daily candle close on super microcomputer since January 19th. So you talk about bubbles popping just for 10 seconds. Let's look. It's like an altcoin, right? It's like Bitcoin. Look, 3 rising valleys. Bitcoin was sideways all of last summer, and then in October it completed the 3 rising valleys, then had its run. And when did it come? Oh, look, mid-March, exactly when Bitcoin finished. And this one's getting wrecked now, but it's like, man, I hope Bitcoin doesn't follow super microcomputer. But that's nasty, man. Like all the lower highs, then 3 of them. Distribution was just ongoing, and you broke that support, and it was over at that point. So anyway, we'll go back to Nvidia. I just wanted you to see that. Let's continue. How did Broadcom do? Broadcom is down 2% on the day, but then another 2% after hours. Also not really looking great. Like one high, the second high. Why are we getting a third high? High to low, 886. It's the same type of bearish shark pattern on Broadcom that Nvidia painted. I don't know if you quite, yeah, it was definitely an 886, man. Just eyeball that. It was beautiful, man. A perfect 886. Fantastic. Yeah, so this one breaking support after hours. Let's continue. Atomera, none of y'all even know what that is. It's awful. It just made its lowest daily candle close since March of 2020. This is a semiconductor. You won't believe it. Atomera, yep, lowest close in over 4 years today. Get freaking wrecked. Intel, I don't think you want to see it. Down 2.29% today, and then after hours, only down 0.46%, so not a big deal there. Marvel down 1.52%. It's crazy how they recaptured this level, and you're still just trying to hold it. Thought this was a line in the sand that was pretty good. But this is what happens when you break it. Bad news. But they're back above the 200, but still a lower high than the previous highs. This is the highest high. All these highs lower than this high, and this is the lowest high so far. So, I don't know. Not really great. NXPI semiconductors down 2.3% today, and then after hours down only 1.12%. So some of these semis not really getting hit too hard. LRCX, that's Lam Research Corporation, they're down almost 2% today, another 1.3% after hours, not a big deal. Skyworks Technology down only 0.44%. Applied Materials is down 1.47% today, and then matching that loss, 1.47% after hours. Very weak. I would say this is not really great, man. Even if I'm like really conservative, that first touch, that's really bearish, right? Like this old level overhead resistance was like was retested really, or maybe not even, and that just shows the weakness. And it's rolling over now. That's not really good at all. That someone flushed the crap out of Applied Materials, man. I don't know if they're coming back anytime soon. When's this gap gonna fill? I don't know, dude. If you don't get back above 213, you're not gonna fill it for a long time. So as we look at Nvidia, everything's fine, man. It's not a big deal. It's down a little bit, not that much, and we could be even in the next 30 minutes, dude. Micron, oh boy, yeah, this one also took it on the chin. 3% down today, then down another 2.5% after hours. I know it's kind of busy here. It exceeded all the major fib extensions. Now it's just up against. Dang, dude, you don't want to lose this. This is the old all-time, not old all-time high, but the old. Was it the old all-time high? I guess so, yeah. No, not even, dude. It's the July of 2000 level. So the Micron market participants have lost the top end of the zone from $93.34 to $97. You're in it. This is like Bitcoin 69K level. So you don't want to lose that. That's not good. Like, what are you doing? Oh, hey, I own Micron for 24 years and I've made no money. That's Micron. That's the reality of it. ADI, nothing. Qualcomm only down 1% after hours, no big deal. Still looks awful, like maybe party's over. Texas Instruments up 0.36%. I mean, all-time high levels up there. How's AMD though, little brother, getting devastated? And you gotta be kind of concerned about AMD because look what they did. The volatility 65-day. They opened it at the support and then max bid it up to where? Is that a joke or is that real? 161. Let me take a look. Well, it's pretty real here, here, and here. Is it real somewhere else? Oh yeah, it's the old all-time high from November 2021. So what was once an old all-time high resistance has been successfully regarded as resistance again. That's not good, and that's the lowest high of downtrend that you're kind of in now. And to boot, you're gonna hate it, man. You're gonna turn off the stream. Hidden bearish divergence on the MACD histogram, implying continuation downward. So if you're an AMD fan, you want to wait for 122 for a confirmation low or something that maybe we get bullish divergence on the second test, but you have no argument to be long on AMD. None. Not right now. 200-day moving average rejected as resistance. It's over. Get wrecked, dude. AMD was hacked today. Gosh, dang, man. Can't catch a break. Sounds like me trying to start this stream up. Let's continue. There are only a few more on the watch list for semiconductors. ASML down 1.82% after hours. Oh boy, dude. All right, if we just look at this, who cares about this? I don't really, but technically speaking, wow. All right, think about it. September 2021, November 2021. You see the inflection zone here, the old all-time highs back here. Look what's happened. Like, this could be an insane short if this level is truly breaking. You're down 1.82% after hours, so you're at 872. So that's below the 883 level. I mean, what happened? Where do you go? Like minimum like 712. You better pray something good happens soon on Nvidia, because there's no way ASML is gonna fill this gap at 1070 if Nvidia doesn't start going. Wow. Okay, ASML. They're gonna dump the. And wouldn't it make sense too? Like, just think about it from a value perspective. This is like a bearish dragon. It hasn't really played out yet. The dragon, right? You have the spine. Flip it. The spine of the dragon. The foot. And the first foot and the second foot. It's the dragon. Okay, so you think about it. Oh, an incomplete M shape. So how does the M shape complete? Well, you completed the X, the A, the B, the C. So the C to D wave is a big wave, and that's 886. So 886 would take you. It would be perfect. It'd be close to that major inflection point. It'd be a full reset in an uptrend. It would be value down here, way lower. Okay, ASML bearish dragon and falling below key levels. Hopefully bids come in on Nvidia. That's all I can say. Yeah, what would make no? And here's the thing. Oh no, like we love local price action, right? Well, I'm sorry. We got. I was about to say, you know, Rep said better short argument. I'm like, well, we like confirmation, and I'm like, oh my god, we do have confirmation locally. It's confirmed. We're screwed. One high, and now the second high is confirming that there are just not enough market participants to keep the price going to go fill this gap up here. So you have a vivid argument for substantially lower prices, hidden bearish divergence, just like on a lot of the others. Yeah, you had the all-time high, and now you have a local confirmation high with substantially higher levels of positive momentum, and that implies continuation downward with max downside potential if this plays out. ASML, kind of a good short argument. Yeah, you're right. Whew. At least Bitcoin's holding up 59.3. I mean, anything above 58.3, 57.5, you're safe. You're not screwed yet. And here it is, man. People getting scared on Nvidia. They're not going to let it go, dude. We'll be positive in the next 15 minutes. Max. We already looked at SMCI. The first one we looked at today was SMCI of the semiconductors when I started on this little, I don't know what you call it, whatever, analysis. We're going to be okay, chat. No one freak out. Not allowed. Okay, the Taiwan Semiconductor Manufacturing Company Limited. Kind of rallied, little V shape, but just kind of sputtering out. Hidden bearish divergence is there, right? Implied continuation downward, and that just makes sense, man, because it was just a random rally, like the others. It was just, yep, we're just gonna max bid, while you know all the brokerages were down at 9:30 a.m. that Monday. We remember. And so the only people that bought at the absolute bottom were institutions. So now you're up here after this really nice run, and you haven't filled a gap yet at 185. It's implied you're going to continue downward soon, because look how close the histogram is to neutral. That's when you know it's well matured. But at the same time, that's all you have is just hidden bearish divergence, and there's no structures here. There's no M shapes or W shape patterns or anything that completed up here. It's just kind of 50% retrace, 61% retrace. Yeah, about 65% retrace. Yep. Okay. And then IBM. Dude, IBM. No trades after hours. I can't even believe this M shape did this. That's crazy. That's freaking nuts. So IBM, International Business Machines Corporation, doing just fine today. Actually, if you can't believe this happened today, but IBM today hit the highest price since May of 2013. We're talking over 11-year highs today on IBM. Remember how it all started? The mega bullish Gartley. Unbelievable. Okay, so those are your semis. Your semiconductors. Guidance was raised apparently on Nvidia, but when price, why not number go up? Someone give me some confirmation of that. Okay. Mag 7, just going through it while we look at the Nvidia chart. Tesla's only down 0.75% now, not near as big of a deal. Amazon's only down 0.43% now. Google's only down 0.2% now. Microsoft only down 0.24%. Apple only down 0.19%, and Meta's only down 0.46%. So, you know, now all of a sudden it's really just it is turning into a nothing burger earnings day that was so anticipated by many. I'm sure The calls and the longs are punch in the air right now. Did you get wrecked, man? Did you get wrecked, chat? Be honest. So, real quick, while we're, I think I did a thorough investigation of the sector or the subsector of semiconductors, while also trying to make this a pristine viewing party if you care about Nvidia earnings, but at the same time trying to provide value to you outside of Nvidia, right? Give you a broader scope. So we can real quick take a look at Bitcoin just for a moment, because we have not looked at Bitcoin today at all. The stream's been going for nearly 50 minutes. So if you're enjoying it, hit the like button, the bell, the sub. Thank you for being here. 814 of y'all. Hype in the chat for just sideways stuff, man. No wrecked. Hey, that's fine. You just got to wonder here, man. You got to wonder on Bitcoin. Just real quick. I'm not trying to make this a Bitcoin show. It's the Nvidia show for sure. We beat a dead horse on that, though. So we're just monitoring this 58.3, 57.5 level. They're still holding it. But unless bids start picking up soon, you're going to be looking at the lowest daily candle close since, I don't know, maybe just only since August 20th. So a week, 8 days ago. Not a big deal. That's not really crazy. It's just the fact that, why are we back down here? All you can do is pray to God that it's like, maybe all the market participants are trying to do right now, is like try to say one time and then a second time. And it's like, dang, dude, confirmation low, major discernible confirmation low at key ice line on Bitcoin. That's all we can pray for at this point, because like once that level breaks, dude, it's just, we're going to continue way lower. 52K, 53K would be on deck. Yeah, it'd be like 53, July 4th's low, and the candle low closed, right? That's where we'll be looking, the targets. Well, bro, we got some serious moaning going on. Sorry. On music. Okay, back to Nvidia. Here it is. Still down, unfortunately. But, it could have been worse, man. It could have been, this could have caught follow through. I just think it's crazy that they raised guidance. And what the heck? Dude, when you have a top to bottom beat and you raise guidance, that's not enough to do anything to the price. What does that mean?
Thanks for the
For real, like, what? That's so bad. Hey, Andrew, too, man. Thank you for the $5 super chat. Yeah, Nvidia stream ongoing. It is currently the Nvidia show, which we don't do, but this might be a new tradition. Since it's, I love Nvidia. Like, it changed my life back in my early 20s. First share I bought of Nvidia was $23. Amazing. And this was like before any of the splits and all that, so. Yeah, so Bitcoin's fine right now. Ethereum, if you don't know, actually is up today, like a lot, like 3%, like holding on to 2,400. We knew there's a level. It is old overhead resistance December of 2023. They recaptured it. They're redefending it now. They're trying to reconfirm its validity as support after it was violated, actually, yesterday. But in the end, kind of nothing burger. Like, you look at the 4 hour and it's like, okay. What are they just trying to back test the old range as resistance? Unfortunately, even on the 4 hour, there is nothing implying much higher prices next. Nothing. Is there a local confirmation low? Nope. Are the oscillators looking like they would look before a major reversal? Nope, not at all. They're looking more like, hey, you were severely oversold, sitting at 19 on the RSI after dumping tremendously, and now you're just resetting the oscillator, but you're still, right now, on this scrubby insignificant 4 hour time scale, you're still within the threshold of the bearish control zone. just like, normally if you want reversals, man, you want to get like, you know, that same old dragon stuff, like the local confirmation lows, a lower low, higher low after the drawdown. You don't have that yet, right? Leave it to your imagination. You always are. You normally get in the more pronounced rallies when it's something like this. And then the oscillators are playing ball, you recapture the level, and then you get stuff like that. You just don't have it yet, unfortunately. But still, up 2.78%. It could have been worse, right? It could have been real bad. So, I mean, congrats for that. How's BNB doing? It's up. He's flat, you know, 0.38%. Never saw 500. It'd be nice to see 500 formally tested as support. But that you have to wait. We would want to wait for that level to be tested, and then we see positive correlation there, right? Like, okay, that's positive price action correlation after testing it. So you're not going there, but this the issue is kind of like, here's your highest high in human history. Here's a low. Actually, unfortunately, it's a lower low than all the previous major discernible swing lows. So the highest high into a lower low real fast, and then a lower high in the previous high, and then a lower low in the previous low, and now we have a lower high than the previous high. You better pray, man, that we put in a higher low next, because you could start, you get a lower low again. It's like, yep, the trend has reversed. We're in a downtrend. You know, once you start falling below 460. So pray for 500 to hold. Everyone should have their alerts set up there to monitor. Okay, going back to Nvidia, right? The 5-minute chart currently trading at $120. Nvidia after hours is currently down 4.46%. You know, it's not crazy, not too bad. So you'd think, like, if we gapped down 4.4% tomorrow, that's like a nothing gap, right? There are only 3 types of gaps, right? The everyday gap, which is a gap that is tight, short-lived, and fills pretty fast, right? The breakaway gap, which a great breakaway gap was, this is a great breakaway gap. See, on earnings, you had huge price disparity, right, where it closed at 30 and opened at 37. Holy crap. On extremely high volume. Those are the 2 signatures of the breakaway gap, meaning that gap won't be filling anytime soon. And then there's the exhaustive gap. The exhaustive gap is when you have earnings report or some sort of catalyst, or it's near the end of a huge run. And I don't really know if there's an example of an exhaustive gap on Nvidia lately. Oh, here we go. This is quite possibly an exhaustive gap. You had high volume on this gap on the earnings. It wasn't even really that high volume. Yeah, probably not even a good example either there before the major markdown. I'm trying to look for a good exhaustive gap. Oh, yeah, that's pretty good exhaustive gap, because you had the gap up on pretty high volume, but not like higher volume than your previous earnings volume. That's an exhaustive gap. Then a bearish abandoned baby came the next day, so then it just went sideways forever, right? Oh my God, before it continued going higher, because it's the crazy uptrend. But yeah, 3 types of gaps, and right now it is kind of a nothing. Like, if it all stayed the same by open tomorrow, it's an everyday gap that would easily fill, and those are good. That's what you call surviving earnings. That's what I call it anyway. You looked at 6 live podcasts, and mine's the most enjoyable. Oh, I appreciate that, man. That really means a lot. I'm glad you feel that way. Hey, man, you know, you could be watching anyone right now. And I'm talking to all like 800 of y'all, and so you chose me, and I really appreciate that on such a special day, such an anticipated day. You chose me, man. Thank y'all. Really, really appreciate it. Yeah, so if you're new in here, I don't know if you are, you never know if there are new people watching. Be sure to join the Discord, because in that Discord, you're going to get notified when I go live, because YouTube's notification system will woefully disappoint you. Like, you won't get notified. You'll miss streams, random streams, especially pump streams when it's random time of going live. But there's educational resources in there, and it's all free. It's just the source material. Educational resources tab. It's like all these different books that you can buy or find on the internet for free, whatever. But it's just like, if you want to dip your toes into the world of traditional technical analysis, it can be very intimidating. It's very complex, field. I mean, there's just so much jargon and stuff. It's like, it's so much that you're like, where do you even start? Well, I can just tell you where I started 14 years ago. Just Japanese candlestick patterns. I just started memorizing them. Steve Neeson stuff. Steve Neeson's book, Japanese Candlesticks. He's the man that brought Japanese candlesticks from Japan to the West. Thank you for the Baba Booey, dude. Yeah, invest in yourself, man. And really, when you learn traditional technical analysis, all you're doing is you're going to be able to better follow along these live streams. You're going to better be able to allocate your money. If there's huge sell signals, man, God, Bitcoin on the 25th of July, I was in here just saying, it's the worst thing that could ever happened on the 29th, with the bearish engulfing candle, the utter rejection of 69K, the previous 2021 cycle top, the local 4-hour confirmation high, the bearish 3 drives on the 4-hour, the bearish divergence, everything, and the top of the channel that's not pictured on this chart, but harmonics. All the variables implied extremely high probability of downside next, and little did we know it would turn into a 30% crash in less than a week. So yeah, you can protect yourself. There are times to make money, and there are times not to lose money. You don't have to go short there. You could just be like, I'll just sideline it and just wait for this to resolve. Because it's 70% chance plus of downside here. Ugh. Only 30% chance that it maybe gets invalidated, but we're already making lower highs, lower lows consecutively anyway. Yeah, constructing arguments for either taking longs or just going cash, or sometimes going short if it's your prerogative. Andrew Taylor, thank you, man. I really appreciate it, dude. So here we are, still just flat, right around $120. The volatility seems to have subsided, at least for the next 5 minutes, because the conference call will be starting soon with Jensen Huang. Jensen Huang's in the chat. Give that man some more cleavage to sign so we can pump to Valhalla. Nothing burger so far. That's right, 4 minutes till the earnings call. We have the call on the stream. Does anyone have a link? Mod someone. If you send me the link, I can stop the music and we can play it. Absolutely, man. Yeah, if you got it, I'll play it. Whew. They are literally selling on all buyers for Nvidia. What do you mean, pouring finance? What do you mean? Yeah, the Nvidia earnings call is live. Man. Yeah, I think I might be able to have it. Gosh dang it. 1 second. Can y'all hear that? Why is there no audio? I can't do audio. I can't turn this up. Yeah, someone give me a maybe a better link where I have control of the audio. Y'all can hear the music fine. I know it's really quiet though, so maybe it's supposed to be like that. Yeah, patiently awaiting 3 minutes or less till the call begins. And Bitcoin is $59,400. It is flat on the day, only down $44. That I would say that's pretty spectacular from where we were midday today. We were at a low of 57,852, and now we're at 59.4. I'd say that's pretty good, man.
You're the man, Mitch. Been following you off and on since 2020. Let's get hyped for college football. Barry, Texas, and
Scabble
OU.
Gabble.
Go Dogs.
Thanks so much, dude, for the 10. And thank you for the follow preview. What the? Hold on. I got to log in real quick. Give me a second. Dude, I don't know my info. Gosh dang it, dude. Give me a break.
I baked a cake the other day and everyone said it was the most fantastic. I had all the ingredients. Had about 88 layers, a ton of frosting, a crap load of candles, and it made a fantastic amount of money. Now off to my 2000th interview. Take care.
Thank you so much, Mr. Trump, President Trump, for the kind words, dude. Baking cakes, dude. We bake cakes here. All right, the music's back on. So once they start speaking, we will be we will see what type of price action we receive, because that's about it. You know, once that call ends and once they say a few things, the volatility really starts drying up. But a top to bottom beat. Cake was good. Had a lot of fun. We made a lot of money. Yep, it's true that. Cake doesn't always pan out, you know. But it's not about that. It's about the probability. It's about risk management. Taking on minimal losses. So if that trade does fail, you're out at a strategic point where the argument becomes no longer to own the asset. But when you're longing at those levels, that means you have maximum upside. Therefore, you have a 3-to-1 minimum reward to risk. So, oh God, Velez, I know you're trolling, dude. Super troll.
Good afternoon. My name is Abby, and I will be your conference.
Hello?
Good afternoon. My name is Abby, and I will be your conference.
What? Y'all hear that? Dude, did the call crash? Bro, what is going on?
Thank you. And Mr. Stuart Stecker, you may begin your conference.
Y'all can hear it?
Thank you.
Mute my mic.
Good afternoon, everyone, and welcome to Nvidia's conference call for the second quarter of fiscal 2025. With me today from Nvidia are Jensen Huang, President and Chief Executive Officer, and Colette Kress, Executive Vice President and Chief Financial Officer. I would like to remind you that our call is being webcast live on Nvidia's Investor Relations website. The webcast will be available for replay until the conference call to discuss our financial results for the third quarter of fiscal 2025. The content of today's call is Nvidia's property. It cannot be reproduced or transcribed without prior written consent. During this call, we may make forward-looking statements based on current expectations. These are subject to a number of risks, significant risks, and uncertainties, and our actual results may differ materially. For a discussion of factors that could affect our future financial results and business, please refer to the disclosure in today's earnings release, our most recent forms 10-K and 10-Q, and the reports that we may file on Form 8-K with the Securities and Exchange Commission. All our statements are made as of today, August 28, 2024, based on information currently available to us, except as required by information currently available to us, except as required by
Bro, what is it doing? Hold on. Sorry. What the?
law. We assume no obligation to update any law. We assume no obligation to update any such statements. During this call, we will discuss non-GAAP financial measures.
Yeah, dude,
You can
it's
find the
buggy.
reconciliation of these non-GAAP financial measures to GAAP financial measures in our CFO commentary, which is posted on our website. Let me highlight an upcoming event for the financial community. We will be attending the Goldman Sachs Communacopia and Technology Conference on September 11th in San Francisco, where Jensen will participate in a keynote fireside chat. Our earnings call to discuss the results of our third quarter of fiscal 2025 is scheduled for Wednesday, November 20th, 2024. With that, let me turn the call over to Colette.
Thanks, Stuart. Q2 was another record quarter. Revenue of $30 billion was up 15% sequentially and up 122% year on year, and well above our outlook of $28 billion. Starting with data center. Data center revenue of $26.3 billion was a record, up 16% sequentially and up 154% year on year, driven by strong demand for Nvidia Hopper GPU computing and our networking platforms. Compute revenue grew more than 2.5x. Networking revenue grew more than 2x from the last year. Cloud service providers represented roughly 45% of our data center revenue, and more than 50% stemmed from the consumer, internet, and enterprise companies. Customers continue to accelerate their Hopper architecture purchases while gearing up to adopt Blackwell. Key workloads driving our data center growth include generative AI, model training and inferencing, video, image, and text data, pre- and post-processing with CUDA and AI workloads, synthetic data generation, AI-powered recommender systems, SQL and vector database processing as well. Next-generation models will require 10 to 20 times more compute to train with significantly more data. The trend is expected to continue. Over the trailing 4 quarters, we estimate that inference drove more than 40% of our data center revenue. CSPs, consumer internet companies, and enterprises benefit from the incredible throughput and efficiency of NVIDIA's inference platform. Demand for NVIDIA is coming from frontier model makers, consumer internet services, and tens of thousands of companies and startups building generative AI applications for consumers, advertising, education, enterprise and healthcare, and robotics. Developers desire NVIDIA's rich ecosystem and availability in every cloud. CSPs appreciate the broad adoption of NVIDIA and are growing their NVIDIA capacity given the high demand. NVIDIA H200 platform began ramping in Q2, shipping to large CSPs, consumer internet, and enterprise companies. The NVIDIA H200 builds upon the strength of our Hopper architecture and offering over 40% more memory bandwidth compared to the H100. Our data center revenue in China grew sequentially in Q2 and is a significant contributor to our data center revenue. As a percentage of total data center revenue, it remains below levels seen prior to the imposition of export controls. We continue to expect the China market to be very competitive going forward. The latest round of MLPerf inference benchmarks highlighted NVIDIA's inference leadership with both NVIDIA Hopper and Blackwell platforms combining to win gold medals on all tests. At Computex, NVIDIA, with the top computer manufacturers, unveiled an array of Blackwell architecture-powered systems and NVIDIA networking for building AI factories and data centers. With the NVIDIA MGX modular reference architecture, our OEMs and ODM partners are building more than 100 Blackwell-based systems designed quickly and cost-effectively. The NVIDIA Blackwell platform brings together multiple GPU, CPU, DPU, NVLink, NVLink switch, and the networking chips, systems, and NVIDIA CUDA software to power the next generation of AI across the cases, industries, and countries. The Nvidia GB200 NVL72 system with the 5th generation NVLink enables all 72 GPUs to act as a single GPU and deliver up to 30 times faster inference for LLMs workloads and unlocking the ability to run trillion parameter models in real time. Hopper demand is strong and Blackwell is widely sampling. We executed a change to the Blackwell GPU mass to improve production yields. Blackwell production ramp is scheduled to begin in the fourth quarter and continue into fiscal year 26. In Q4, we expect to ship several $billion in Blackwell revenue. Hopper shipments are expected to increase in the second half of fiscal 2025. Hopper supply and availability have improved. Demand for Blackwell platforms is well above supply, and we expect this to continue into next year. Networking revenue increased 16% sequentially. Our Ethernet for AI revenue, which includes our Spectrum-X end-to-end Ethernet platform, doubled sequentially with hundreds of customers adopting our Ethernet offerings. Spectrum-X has broad market support from OEM and ODM partners and is being adopted by CSPs, GPU cloud providers, and enterprise, including xAI, to connect the largest GPU compute cluster in the world. Spectrum-X supercharges Ethernet for AI processing and delivers 1.6x the performance of traditional Ethernet. We plan to launch new Spectrum-X products every year to support demand for scaling compute clusters from tens of thousands of GPUs today to millions of GPUs in the near future. Spectrum-X is well on track to begin a multi-billion-dollar product line within a year. Our sovereign AI opportunities continue to expand as countries recognize AI expertise and infrastructure at national imperatives for their society and industries. Japan's National Institute of Advanced Industrial Science and Technology is building its AI Bridging Cloud Infrastructure 3.0 supercomputer with Nvidia. We believe sovereign AI revenue will reach low double-digit billions this year. The enterprise AI wave has started. Enterprises also drove sequential revenue growth in the quarter. We are working with most of the Fortune 100 companies on AI initiatives across industries and geographies. A range of applications are fueling our growth, including AI-powered chatbots, generative AI copilots, and agents to build new monetizable business applications and enhance employee productivity. Amdocs is using NVIDIA generative AI for their smart agent, transforming the customer experience and reducing customer service costs by 30%. ServiceNow is using NVIDIA for its Now Assist offering, the fastest growing new product in the company's history. SAP is using NVIDIA to build Joule copilots. Cohesity is using NVIDIA to build their generative AI agent and lower generative AI development costs. Snowflake serves over 3 billion queries a day for over 10,000 enterprise customers, is working with NVIDIA to build copilots. And lastly, Wistron is using NVIDIA AI Omniverse to reduce end-to-end cycle times for their factories by 50%. Automotive was a key growth driver for the quarter, as every automaker developing autonomous vehicle technology is using NVIDIA in their data centers. Automotive will drive multi-billion dollars in revenue across on-prem and cloud consumption and will grow as next generation AV models require significantly more compute. Healthcare is also on its way to being a multi-billion-dollar business as AI revolutionizes medical imaging, surgical robots, patient care, electronic health record processing, and drug discovery. During the quarter, we announced a new NVIDIA AI Foundry service to supercharge generative AI for the world's enterprises with Meta's Llama 3.1 collection of models. This marks a watershed moment for enterprise AI. Companies, for the first time, can leverage the capabilities of an open source frontier level model to develop customized AI applications to encode their institutional knowledge into an AI flywheel to automate and accelerate their business. Accenture is the first to adopt the new service to build custom Llama 3.1 models for both its own use and to assist clients seeking to deploy generative AI applications. NVIDIA NIMs accelerate and simplify model deployment. Companies across healthcare, energy, financial services, retail, transportation, and telecommunications are adopting NIMs, including Aramco, Lowe's, and Uber. AT&T realized 70% cost savings and 8 times latency reduction after moving into NIMs
When
for
I'm
generative
president
AI,
again, my
call
first order of
transcription,
business
and
will be to have her
classification.
talk to Iran for hours
Over
until they're so
150
tired
partners
they'll just
are
want to buy a
embedding
computer and listen
NIMs
to
across every
ASMR,
layer of the AI
thunderstorms,
ecosystem.
problem solved.
We announced NIM Agent Blueprints, a catalog of customizable reference applications that include a full suite of software for building and deploying enterprise generative AI applications. With NIM Agent Blueprints, enterprises can refine their AI applications over time, creating a data-driven AI flywheel. The first NIM Agent Blueprints include workloads for customer service, computer-aided drug discovery, and enterprise retrieval augmented generation. Our system integrators, technology solution providers, and system builders are bringing NVIDIA NIM Agent Blueprints to enterprises. NVIDIA NIM and NIM Agent Blueprints are available through the NVIDIA AI Enterprise Software Platform, which has great momentum. We expect our software, SaaS, and support revenue to approach a $2 billion annual run rate exiting this year, with NVIDIA AI Enterprise notably contributing to growth. Moving to gaming and AI PCs. Gaming revenue of $2.88 billion increased 9% sequentially and 16% year on year. We saw sequential growth in console, notebook, and desktop revenue, and demand is strong and growing, and channel inventory remains healthy. Every PC with RTX is an AI PC. RTX PCs can deliver up to 1,300 AI TOPS, and there are now over 200 RTX AI laptops designed from leading PC manufacturers. With 600 AI-powered applications and games and an installed base of 100 million devices, RTX is set to revolutionize consumer experiences with generative AI. NVIDIA ACE, a suite of generative AI technologies, is available for RTX AI PCs. Mega Break is the first game to use NVIDIA ACE, including our small language model, Minitron 4B, optimized on device inference. The NVIDIA gaming ecosystem continues to grow. Recently added RTX and DLSS titles include Indiana Jones and the Great Circle, Dune Awakening, and Dragon Age: The Veilguard. The GeForce Now library continues to expand with total catalog size of over 2,000 titles, the most content of any cloud gaming service. Moving to Pro Visualization. Revenue of $454 million was up 6% sequentially and 20% year on year. Demand is being driven by AI and graphic use cases, including model fine-tuning and Omniverse-related workloads. Automotive and manufacturing were among the key industry verticals driving growth this quarter. Companies are racing to digitalize workflows to drive efficiency across their operations. The world's largest electronics manufacturer, Foxconn, is using NVIDIA Omniverse to power digital twins of the physical plants that produce NVIDIA Blackwell systems. And several large global enterprises, including Mercedes-Benz, signed multi-year contracts for NVIDIA Omniverse Cloud to build industrial digital twins of factories. We announced new NVIDIA USD NIMs and connectors to open Omniverse to new industries and enable developers to incorporate generative AI copilots and agents into USD workflows, accelerating their ability to build highly accurate virtual worlds. WPP is implementing USD NIM microservices in its generative AI-enabled content creation pipeline for customers, such as the Coca-Cola Company. Moving to automotive and robotics, revenue was $346 million, up 5% sequentially and up 37% year-on-year. Year-on-year growth was driven by the new customer ramps in self-driving platforms and increased demand for AI cockpit solutions. At the Computer Vision and Pattern Recognition Conference, Nvidia won the Autonomous Grand Challenge in the end-to-end driving at scale category, outperforming more than 400 entries worldwide. Boston Dynamics, BYD Electronics, Figure, Intrinsic, Siemens, Skilled AI, and Teradyne Robotics are using the Nvidia Isaac robotics platform for autonomous robot arms, humanoids, and mobile robots. Now moving to the rest of the P&L. GAAP gross margins were 75.1% and non-GAAP gross margins were 75.7%, down sequentially due to a higher mix of new products within data center and inventory provisions for low-yielding Blackwell material. Sequentially, GAAP and non-GAAP operating expenses were up 12%, primarily reflecting higher compensation-related costs. Cash flow from operations was $14.5 billion. In Q2, we utilized cash of $7.4 billion towards shareholder returns in the form of share repurchases and cash dividends, reflecting the increase in dividend per share. Our board of directors recently approved a $50 billion share repurchase authorization to add to our remaining $7.5 billion of authorization at the end of Q2. Let me turn the outlook for the third quarter. Total revenue is expected to be $32.5 billion, plus or minus 2%. Our third quarter revenue outlook incorporates continued growth of our Hopper architecture and sampling of our Blackwell products. We expect Blackwell production ramp in Q4. GAAP and non-GAAP gross margins are expected to be 74.4% and 75% respectively, plus or minus 50 basis points. As our data center mix continues to shift to new products, we expect this trend to continue into the fourth quarter of fiscal 2025. For the full year, we expect gross margins to be in the mid-70% range. GAAP and non-GAAP operating expenses are expected to be approximately $4.3 billion and $3.0 billion, respectively. Full-year operating expenses are expected to grow in the mid to upper 40% range as we work on developing our next generation of products. GAAP and non-GAAP other income and expenses are expected to be about $350 million, including gains and losses from non-affiliated investments and publicly held equity securities. GAAP and non-GAAP tax rates are expected to be 17%, plus or minus 1%, excluding any discrete items. Further financial details are included in the CFO commentary and other information available on our IR website. We are now going to open the call for questions. Operator, would you please help us and poll for questions?
Thank you. And at this time, I would like to remind everyone, in order to ask a question, press star and then the number 1 on your telephone keypad. We will pause for just a moment to compile the Q&A roster.
Yeah, here's this
As a reminder, we ask you
118
to
level,
please limit
right? The
yourself
swing
to
low from
one
June
question.
24th, test in July, support resistance in August.
And your first question.
That's where we're
comes
trading
from
at
the line
right
of
now.
Vivek
So just
Arya with
that's
Bank of
that red
America
line
Securities. Your line is
on the
open.
other screen.
Thanks for taking my question. Jensen, you mentioned in the prepared comments that there's a change in the Blackwell GPU mask. I'm curious, are there any other incremental changes in back-end packaging or anything else And I think related, you suggested that you could ship several $billion of Blackwell in Q4 despite a change in the design. Is it because all these issues will be solved by then? Just help us size what is the overall impact of any changes in Blackwell timing, what that means to your kind of revenue profile, and how are customers reacting to it?
Yeah, thanks, Vivek. The change to the mask is complete. There were no functional changes necessary. And so we're sampling functional samples of Blackwell, Grace Blackwell, in a variety of system configurations as we speak. There are something like 100 different types of Blackwell-based systems that are built that were shown at Computext. And we're enabling our ecosystem to start sampling those. The functionality of Blackwell is as it is, and we expect to start production in Q4.
And your next question comes from the line of Toshiya Hari with Goldman Sachs. Your line is open.
Hi, thank you so much for taking the question. Jensen, I had a relatively longer-term question. As you may know, there's a pretty heated debate in the market on your customers and customers' return on investment, and what that means for the sustainability of CapEx going forward. Internally at Nvidia, like what are you guys watching? What's on your dashboard as you try to gauge customer return and how that impacts CapEx? And then a quick follow-up maybe for Colette. I think your sovereign AI number for the full year went up maybe a couple billion. What's driving the improved outlook, and how should we think about fiscal 26? Thank you.
Thanks, Toshiya. First of all, when I said ship production in Q4, I mean shipping out. I don't mean starting to ship, but I don't mean starting production, but shipping out. On the longer term question, let's take a step back. And you've heard me say that we're going through two simultaneous platform transitions at the same time. The first one is transitioning from accelerated computing from general purpose computing to accelerated computing. And the reason for that is because CPU scaling has been known to be slowing for some time. And it is slow to a crawl. And yet the amount of computing demand continues to grow quite significantly. You could maybe even estimate it to be doubling every single year. And so if we don't have a new approach, computing inflation would be driving up the cost for every company, and it would be driving up the energy consumption of data centers around the world. In fact, you're seeing that. And so the answer is accelerated computing. We know that accelerated computing, of course, speeds up applications. It also enables you to do computing at a much larger scale, for example, scientific simulations or database processing. But what that translates directly to is lower cost and lower energy consumed. And in fact, this week, there's a blog that came out that talked about a whole bunch of new libraries that we offer. And that's really the core of the first platform transition, going from general purpose computing to accelerated computing. And it's not unusual to see someone save 90% of their computing cost. And the reason for that is, of course, you just sped up an application 50x. You would expect the computing cost to decline quite significantly. The second was enabled by accelerated computing because we drove down the cost of training large language models or training deep learning so incredibly that it is now possible to have gigantic scale models, multi-trillion parameter models, and pre-train it on just about the world's knowledge corpus, and let the model go figure out how to understand human language representation and how to codify knowledge into its neural networks and how to learn reasoning. And so which caused the generative AI revolution. Now, generative AI, taking a step back about why it is that we went so deeply into it, is because it's not just a feature, it's not just a capability, it's a fundamental new way of doing software. Instead of human engineered algorithms, we now have data. We tell the AI, we tell the model, we tell the computer what are the expected answers, what are our previous observations, and then for it to figure out what the algorithm is, what's the function. It learns a universal, AI is a bit of a universal function approximator, and it learns the function. And so you could learn the function of almost anything, and anything that you have that's predictable, anything that has structure, anything that that you have previous examples of. And so now here we are with generative AI. It's a fundamental new form of computer science. It's affecting how every layer of computing is done, from CPU to GPU, from human engineered algorithms to machine learned algorithms, and the type of applications you could now develop and produce is fundamentally remarkable. And there are several things that are happening in generative AI. So the first thing that's happening is the frontier models are growing in quite substantial scale. And we're still all seeing the benefits of scaling. And whenever you double the size of a model, you also have to more than double the size of the data set to go train it. And so the amount of flops necessary in order to create that model goes up quadratically. And so it's not unusual, it's not unexpected to see that the next generation models could take 10, 20, 40 times more compute than last generation. So we have to continue to drive the generational performance up quite significantly so we can drive down the energy consumed and drive down the cost necessary to do it. So the first one is there are larger frontier models trained on more modalities, and surprisingly, there are more frontier model makers than last year. And so you have more on more on more. That's one of the dynamics going on in generative AI. The second is, although it's below the tip of the iceberg, what we see are ChatGPT, image generators. We see coding. We use generative AI for coding quite extensively here at Nvidia now. We of course have a lot of digital designers and things like that, but those are kind of the tip of the iceberg. What's below the iceberg are the largest computing systems in the world today, which are, and you've heard me talk about this in the past, which are recommender systems moving from CPUs. It's now moving from CPUs to generative AI. So recommender systems, ad generation, custom ad generation, targeting ads at very large scale and quite hyper targeting, search and user generated content. These are all very large scale applications have now evolved to generative AI. Of course, the number of generative AI startups is generating tens of billions of dollars of cloud renting opportunities for our cloud partners, and sovereign AI. Countries that are now realizing that their data is their natural and national resource, and they have to use AI, build their own AI infrastructure so that they could have their own digital intelligence. Enterprise AI, as Colette mentioned earlier, is starting, and you might have seen our announcement that the world's leading IT companies are joining us to take the Nvidia AI Enterprise platform to the world's enterprises. The companies that we're talking to, so many of them are just so incredibly excited to drive more productivity out of their company. And then general robotics. The big transformation last year, as we are able to now learn physical AI from watching video and human demonstration and synthetic data generation, from reinforcement learning from systems like Omniverse. We are now able to work with just about every robotics companies now to start building general robotics. And so you can see that there are just so many different directions that generative AI is going. And so we're actually seeing the momentum of generative AI accelerating.
And Toshiya, to answer your question regarding sovereign AI and our goals in terms of growth, in terms of revenue, it certainly is a unique and growing opportunity, something that surfaced with generative AI and the desires of countries around the world to have their own generative AI that would be able to incorporate their own language, incorporate their own culture, incorporate their own data in that country. So more and more excitement around these models and what they can be specific for those countries. So yes, we are seeing some growth opportunity in front of us.
And your next question comes from the line of Joe Moore with Morgan Stanley. Your line is open.
Great, thank you. Jensen, in the press release, you talked about Blackwell anticipation being incredible, but it seems like Hopper demand is also really strong. I mean, you're guiding for a very strong quarter without Blackwell in October. So, how long do you see sort of coexisting strong demand for both? And can you talk about the transition to Blackwell? Do you see people intermixing clusters? Do you think most of the Blackwell activity is new clusters? Just some sense of what that transition looks like.
Yeah, thanks, Joe. The demand for Hopper is really strong. And it's true, the demand for Blackwell is incredible. There's a couple of reasons for that. The first reason is if you just look at the world's cloud service providers and the amount of GPU capacity they have available, it's basically none. And the reason for that is because they're either being deployed internally for accelerating their own workloads, data processing, for example. Data processing, we hardly ever talk about it because it's mundane. It's not very cool because it doesn't generate a picture or, generate words, but almost every single company in the world processes data in the background. And NVIDIA's GPUs are the only accelerators on the planet that process and accelerate data. SQL data, Pandas data science toolkits like Pandas, and the new one, Polars. These are the most popular data processing platforms in the world. And aside from CPUs, which, as I've mentioned before, really running out of steam, NVIDIA's accelerated computing is really the only way to get boosting performance out of that. And so that's number one, is the number one use case long before generative AI came along is the migration of applications one after another to accelerated computing. The second is, of course, the rentals. They're renting capacity to model makers, they're renting it to startup companies. And a generative AI company spends the vast majority of their invested capital into infrastructure so that they could use an AI to help them create products. And so these companies need it now. They just simply can't afford, you just raised money, they want you to put it to use now. You have processing that you have to do. You can't do it next year, you got to do it today. And so there's a fair, that's one reason. The second reason for Hopper demand right now is because of the race to the next plateau. The first person to the next plateau gets to be, gets to introduce a revolutionary level of AI. The second person who gets there is incrementally, better or about the same. And so the ability to systematically and consistently race to the next plateau and be the first one there is how you establish leadership. NVIDIA is constantly doing that, and we show that to the world in the GPUs we make and the AI factories that we make, the networking systems that we make, the SoCs we create. I mean, we want to set the pace. We want to be consistently the world's best, and that's the reason why we drive ourselves so hard. Of course, we also want to see our dreams come true, and all of the capabilities that we imagine in the future and the benefits that we can bring to society. We want to see all that come true, and so these model makers are the same. They're of course they want to be the world's best. They want to be the world's first, and although Blackwell will start shipping out in billions of dollars at the end of this year, the standing up of the capacity is still probably, weeks and a month or so away. And so between now and then is a lot of generative AI market dynamic. And so everybody is just really in a hurry. It's either operational reasons that they need it. They need accelerated computing. They don't want to build any more general purpose computing infrastructure. And even Hopper, of course, H200 is state of the art. Hopper, if you have a choice between building CPU infrastructure right now for business or Hopper infrastructure for business right now, that decision is relatively clear. And so I think people are just clamoring to transition the $1 trillion of established installed infrastructure to a modern infrastructure, and Hopper is state of the art.
And your next question comes from the line of Matt Ramsey with TD Cowen. Your line is open.
Thank you very much. Good afternoon, everybody. Jensen, I wanted to kind of circle back to an earlier question about the debate that investors are having about, I don't know, the ROI on all of this CapEx. And hopefully this question and the distinction will make some sense. But what I'm having discussions about is with like the percentage of folks that you see that are spending all of this money and looking to sort of push the frontier towards AGI convergence and, as you just said, a new plateau in capability, and they're going to spend regardless to get to that level of capability because it opens up so many doors for the industry and for their company, versus customers that are really, really focused today on CapEx versus ROI. I don't know if that distinction makes sense. I'm just trying to get a sense of how you're seeing the priorities of people that are putting the dollars in the ground on this new technology and what their priorities are and their time frames are for that investment. Thanks.
Thanks, Matt. The people who are investing in Nvidia infrastructure are getting returns on it right away. It's the best ROI computing infrastructure investment you can make today. And so one way to think through it, probably the easiest way to think through it is just go back to first principles. You have $1 trillion worth of general purpose computing infrastructure, and the question is, do you want to build more of that or not? And for every $1 billion worth of general purpose CPU-based infrastructure that you stand up, you probably rent it for less than $1 billion. And so, because it's commoditized, there's already $1 trillion on the ground. What's the point of getting more? And so the people who are clamoring to get this infrastructure, one, when they build out Hopper-based infrastructure and soon Blackwell-based infrastructure, they start saving money. That's tremendous return on investment. And the reason why they start saving money is because data processing saves money. Data processing is probably just a giant part of it already. And so recommender systems save money. So on and so forth, okay? And so you start saving money. The second thing is everything you stand up are going to get rented because so many companies are being founded to create generative AI, and so your capacity gets rented right away, and the return on investment of that is really good. And then the third reason is your own business. You want to either create the next frontier yourself or your own internet services benefit from a next generation ad system or a next generation recommender system or a next generation search system. So for your own services, for your own stores, for your own user generated content, social media platforms, for your own services, generative AI is also a fast ROI. And so there's a lot of ways you could think through it, but at the core, it's because it is the best computing infrastructure you could put in the ground today. The world of general purpose computing is shifting to accelerated computing. The world of human engineered software is moving to generative AI software. If you were to build infrastructure to modernize your cloud and your data centers, build it with accelerated computing NVIDIA. That's the best way to do it.
your next question comes from the line of Timothy Arcuri with UBS. Your line is open.
Thanks a lot. I had a question on the shape of the revenue growth, both near and longer term. I know, Colette, you did, increase OpEx for the year, and if I look at the increase in your purchase commitments and your supply obligations, that's also quite bullish. On the other hand, there's some, school of thought that not that many customers really seem ready for liquid cooling, and I do recognize that some of these racks can be air cooled. But Jensen, is that something to consider, sort of on the shape of how Blackwell is going to ramp? And then I guess when you look beyond, next year, which is obviously going to be a great year, and you look into 26, do you worry about any other, gating factors like, say, the power supply chain, or at some point models start to get smaller? I'm just wondering if you can speak to that. Thanks.
I'm going to work backwards. I really appreciate the question, Tim. So remember, the world is moving from general purpose computing to accelerated computing. And the world builds about $1 trillion worth of data centers. $1 trillion worth of data centers in a few years will be all accelerated computing. In the past, no GPUs are in data centers, just CPUs. In the future, every single data center will have GPUs. And the reason for that is very clear, because we need to accelerate workloads so that we can continue to be sustainable, continue to drive down the cost of computing, so that when we do more computing, we don't experience computing inflation. Second, we need GPUs for a new computing model called generative AI that we can all acknowledge is going to be quite transformative to the future of computing. And so I think working backwards, the way to think about that is the next $1 trillion of the world's infrastructure will clearly be different than the last trillion, and it'll be vastly accelerated. With respect to the shape of our ramp, we offer multiple configurations of Blackwell. Blackwell comes in either a Blackwell Classic, if you will, that uses the HGX form factor that we pioneered with Volta, and I think it was Volta. And so we've been shipping the HGX form factor for some time. It is air cooled. The Grace Blackwell is liquid cooled. However, the number of data centers that want to go liquid cooled is quite significant. And the reason for that is because we can, in a liquid cooled data center, in any data center, power limited data center, whatever size data center you choose, you could install and deploy anywhere from 3 to 5 times the AI throughput compared to the past. And so liquid cooling is cheaper. Liquid cooling, our TCO is better, and liquid cooling allows you to have the benefit of this capability we call NVLink, which allows us to expand it to 72 Grace Blackwell packages, which has essentially 144 GPUs. And so imagine 144 GPUs connected in NVLink, and that we're increasingly showing you the benefits of that. And the next click is obviously very low latency, very high throughput, large language model inference. And the large NVLink domain is going to be a game changer for that. And so I think people are very comfortable deploying both. And so almost every CSP we're working with are deploying some of both. And so I'm pretty confident that we'll ramp it up just fine. Your second question out of the third is that looking forward, next year is going to be a great year. We expect to grow our data center business quite significantly next year. Blackwell is going to be a complete game changer for the industry, and Blackwell is going to carry into the following year. And as I mentioned earlier, working backwards from first principles, remember that computing is going through 2 platform transitions at the same time, and that's just really, really important to keep your head on, your mind focused on, which is general purpose computing is shifting to accelerated computing, and human engineered software is going to transition to generative AI, or artificial intelligence learned software. Okay.
And your next question comes from the line of Stacy Rasgon with Bernstein Research. Your line is open.
Hi, guys. Thanks for taking my questions. I have two short questions for Colette. The first, several $billion of Blackwell revenue in Q4. Like, is that additive? You said you expected Hopper demand to strengthen in the second half. Does that mean Hopper strengthens Q3 to Q4 as well on top of Blackwell adding several $billion? And the second question on gross margins, if I have mid-70s for the year, depending where I want to draw that, if I have 75 for the year, I'd be something like 71 to 72 for Q4, somewhere in that range. Is that the kind of exit rate for gross margins that you're expecting? And how should we think about the drivers of gross margin evolution into next year as Blackwell ramps? And I mean, hopefully, I guess the yields and the inventory reserves and everything come up.
Yes, so Stacy, let's first take your question that you had about Hopper and Blackwell. So we believe our Hopper will continue to grow into the second half. We have many new products for Hopper, our existing products for Hopper, that we believe will start continuing to ramp in the next quarters, including our Q3 and those new products moving to Q4. So let's say Hopper therefore versus H1 is a growth opportunity for that. Additionally, we have the Blackwell on top of that, and the Blackwell starting of ramping in Q4. So hope that helps you on those two pieces. Your second piece is in terms of on our gross margin. We provided gross margin for our Q3. We provided our gross margin on a non-GAAP at about 75. We'll work with all the different transitions that we're going through, but we do believe we can do that 75 in Q3. We provided that we're still on track for the full year, also in the mid-70s or approximately the 75. So we're going to see some slight difference possibly in Q4, again, with our transitions and the different cost structures that we have on our new product introductions. However, I'm not in the same number that you are there. We don't have exactly guidance, but I do believe you're lower than where we are.
And your next question comes from the line of Ben Reitzes with Melius. Your line is open.
Yeah, hey, thanks a lot for the question, Jensen and Colette. I wanted to ask about the geographies. There was the 10Q that came out, and the United States was down sequentially, while several Asian geographies were up a lot sequentially. Just wondering what the dynamics are there. And obviously China did very well. You mentioned it in your remarks. What are the puts and takes? And then I just wanted to clarify from Stacy's question if that means the sequential overall revenue growth rates for the company accelerate in the fourth quarter, given all those favorable revenue dynamics. Thanks.
Let me talk about a bit in terms of our disclosure in terms of the 10Q, a required disclosure in a choice of geographies. Very challenging sometimes to create that right disclosure, as we have to come up with one key piece. Pieces in terms of in terms of who we sell to and or specifically who we invoice to. And so what you're seeing in terms of there is who we invoice. That's not necessarily where the product will eventually be and where it may even travel to the end customer. These are just moving to our OEMs, our ODMs, and our system integrators for the most part across our product portfolio. So what you're seeing there is sometimes just a swift shift in terms of who they are using to complete their full configuration before those things are going into the data center, going into notebooks and those pieces of it. And that shift happens from time to time. But yes, our China number there, our invoicing to China, keep in mind that is incorporating both gaming, also data center, also automotive in those numbers that we have. Going back to your statement in regarding gross margin and also what we're seeing in terms of what we're looking at for Hopper and Blackwell in terms of revenue. Hopper will continue to grow in the second half. Will continue to grow from what we are currently seeing. During determining that exact mix in each Q3 and Q4, we don't have here. We are not here to guide yet in terms of Q4. But we do see right now the demand expectations. We do see the visibility that will be a growth opportunity in Q4. On top of that, we will have our Blackwell architecture.
And your next question comes from the line of C.J. Muse with Cantor Fitzgerald. Your line is open.
Yeah, good afternoon. Thank you for taking the question. You've embarked on a remarkable annual product cadence with challenges only likely becoming more and more given rising complexity and a reticle limit advanced package world. So curious, if you take a step back, how does this backdrop alter your thinking around potentially greater vertical integration, supply chain partnerships, and then thinking through consequential impact to your margin profile? Thank you.
Yeah, thanks. Let's see. I think the answer to your first question is that the reason why our velocity is so high is simultaneously because the complexity of the model is growing, and we want to continue to drive its cost down. It's growing, so we want to continue to increase its scale. And we believe that by continuing to scale the AI models, that will reach a level of extraordinary usefulness, and that it would open up, realize the next industrial revolution. We believe it, and so we're going to drive ourselves really hard to continue to go up that scale. We have the ability, fairly uniquely, to integrate to design an AI factory because we have all the parts. It's not possible to come up with a new AI factory every year unless you have all the parts. And so we have next year, we're going to ship a lot more CPUs than we've ever had in the history of our company, more GPUs, of course, but also NVLink switches, CX DPUs, ConnectX CPU for East and West, Bluefield DPUs for North and South, and data and storage processing, to InfiniBand for supercomputing centers, to Ethernet, which is a brand new product for us, which is well on its way to becoming a multi-billion-dollar business to bring AI to Ethernet. And so the fact that we could build, we have access to all of this. We have one architectural stack, as you know. It allows us to introduce new capabilities to the market, as we complete it. Otherwise, what happens is you ship these parts, you go find customers to sell it to, and then somebody's got to build up an AI factory. And the AI factory's got a mountain of software. And so it's not about who integrates it. We love the fact that our supply chain is disintegrated in the sense that we could service, Quanta, Foxconn, HP, Dell, Lenovo, Supermicro. We used to be able to service ZT. They were recently purchased, and so on and so forth. And so the number of ecosystem partners that we have, Gigabyte, ASUS, the number of ecosystem partners that we have, that allows them to take our architecture, which all works, but integrated in a bespoke way into all of the world's cloud service providers, enterprise data centers. The scale and reach necessary from our ODMs and our integrator supply chain is vast and gigantic because the world is huge. And so that part we don't want to do, and we're not good at doing. And but we know how to design the AI infrastructure, provide it the way that customers would like it, and lets the ecosystem integrate it. So anyways, that's the reason why.
And your final question comes from the line of Aaron Rakers with Wells Fargo. Your line is open.
Yes, thanks for taking the question. I wanted to go back into the Blackwell product cycle. One of the questions that we tend to get asked is how you see the rack scale system mix dynamic as you think about leveraging NVLink, you think about GB, NVL72, and how that go-to-market, dynamic looks, as far as the Blackwell product cycle. I guess, put distinctly, How do you see that mix of rack scale systems as we start to think about the Blackwell cycle playing out?
Yeah, Aaron, thanks. The Blackwell rack system, it's designed and architected as a rack, but it's sold in disaggregated system components. We don't sell the whole rack. And the reason for that is because everybody's rack.
Yeah, I'm here.
Surprisingly. You know, some of them are OCP standards, some of them are not, some of them are enterprise. And the power limits for everybody could be a little different. Choice of CDUs, the choice of power bus bars, the configuration and integration into people's data centers, all different. And so the way we designed it, we architected the whole rack. The software is going to work perfectly across the whole rack. And then we provide the system components. Like, for example, the CPU and GPU compute board is then integrated into an MGX. It's a modular system architecture. MGX is completely ingenious. And we have MGX ODMs and integrators and OEMs all over the planet. And so just about, you know, any configuration you would like, where you would like that 3,000-pound rack to be delivered, you know, it's got to be close to, it has to be integrated and assembled close to the data center because it's fairly heavy. And so everything from the supply chain, from the moment that we ship the GPU, CPUs, the switches, the NICs, from that point forward, the integration is done quite close to the location of the CSPs and the locations of the data centers. And so you can imagine how many data centers in the world there are and how many logistics hubs we've scaled out to with our ODM partners. And so I think that because we show it as one rack and because it's always, you know, rendered that way and shown that way, we might have left the impression that we're doing the integration. Our customers hate that we do integration. The supply chain hates us doing integration. They want to do the integration. That's their value added. There's a final design in, if you will. You know, it's not quite as simple as shimmy into a data center, but that design fit in is really complicated. And so the design fit in, the installation, the bring up, the repair and replace, that entire cycle is done all over the world. And we have a sprawling network of ODM and OEM partners that does this incredibly well. So integration is not the reason why we're doing racks. It's the anti-reason of doing it. The way we don't want to be an integrator, we want to be a technology provider.
And I will now turn the call back over to Jensen Huang for closing remarks.
Thank you. Let me make a couple of comments that I made earlier again. That data center worldwide are in full steam to modernize the entire computing stack with accelerated computing and generative AI. Hopper demand remains strong and the anticipation for Blackwell is incredible. Let me highlight the top 5 things. The top 5 things of our company. Accelerated computing has reached a tipping point. CPU scaling slows. Developers must accelerate everything possible. Accelerated computing starts with CUDA-X libraries. New libraries open new markets for Nvidia. We released many new libraries, including CUDA-accelerated Polars, Pandas, and Spark, the leading data science and data processing libraries. cuVS for vector databases. This is incredibly hot right now. Ariel and Shiona for 5G wireless base station. A whole suite of a whole world of data centers that we can go into now. Parabricks for gene sequencing, and AlphaFold 2 for protein structure prediction is now CUDA accelerated. We are at the beginning of our journey to modernize $1 trillion worth of data centers from general purpose computing to accelerated computing. That's number 1. Number 2, Blackwell is a step function leap over Hopper. Blackwell is an AI infrastructure platform, not just a GPU. Also happens to be the name of our GPU, but AI infrastructure platform. As we reveal more of Blackwell and sample systems to our partners and customers, the extent of Blackwell's leap becomes clear. The Blackwell vision took nearly 5 years and 7 one-of-a-kind chips to realize. The Grace CPU, the Blackwell dual GPU in a CoWoS package, ConnectX DPU for east-west traffic, Bluefield DPU for north-south and storage traffic, NVLink switch for all-to-all GPU communications, and Quantum and Spectrum X for both InfiniBand and Ethernet can support the massive burst traffic of AI. Blackwell AI factories are building-sized computers. Nvidia designed and optimized the Blackwell platform full stack, end-to-end, from chips, systems, networking, even structured cables, power and cooling, and mountains of software to make it fast for customers to build AI factories. These are very capital-intensive infrastructures. Customers want to deploy it as soon as they get their hands on the equipment and deliver the best performance and TCO. Blackwell provides 3 to 5 times more AI throughput in a power-limited data center than Hopper. The third is NVLink. This is a very big deal. With its all-to-all GPU switch is game-changing. The Blackwell system lets us connect 144 GPUs in 72 GB200 packages into one NVLink domain, with an aggregate NVLink bandwidth of 259 terabytes per second in one rack. Just put that in perspective, that's about 10 times higher than Hopper. 259 terabytes per second kind of makes sense because you need to boost the training of multi-trillion parameter models on trillions of tokens. And so that natural amount of data needs to be moved around from GPU to GPU. For inference, NVLink is vital for low latency, high throughput, large language model token generation. We now have 3 networking platforms: NVLink for GPU scale up, Quantum InfiniBand for supercomputing and dedicated AI factories, and Spectrum X for AI on Ethernet. NVIDIA's networking footprint is much bigger than before. Generative AI momentum is accelerating. Generative AI frontier model makers are racing to scale to the next AI plateau to increase model safety and IQ. We're also scaling to understand more modalities from text, images, and video to 3D, physics, chemistry, and biology. Chatbots, coding AIs, and image generators are growing fast, but it's just the tip of the iceberg. Internet services are deploying generative AI for large-scale recommenders, ad targeting, and search systems. AI startups are consuming tens of billions of dollars yearly of CSP's cloud capacity, and countries are recognizing the importance of AI and investing in sovereign AI infrastructure. And NVIDIA AI and NVIDIA Omniverse is opening up the next era of AI, general robotics. And now the enterprise AI wave has started, and we're poised to help companies transform their businesses. The NVIDIA AI Enterprise Platform consists of NeMo, NIMs, NIM agent blueprints, and AI Foundry that our ecosystem partners, the world-leading IT companies, use to help companies customize AI models and build bespoke AI applications. Enterprises can then deploy on NVIDIA AI Enterprise Runtime. And at $4,500 per GPU per year, NVIDIA AI Enterprise is an exceptional value for deploying AI anywhere. And for NVIDIA's software TAM can be significant as the CUDA-compatible GPU installed base grows from millions to tens of millions. And as Colette mentioned, NVIDIA software will exit the year at a $2 billion run rate. Thank you all for joining us today.
And ladies and gentlemen, this concludes today's call, and we thank you for your participation. You may now disconnect.
My name is JP. I'm a robot. I like robots. I have a robot vagina.
Well, there you have it. Earnings calls done. What happened on Nvidia throughout? A perfect to the cent retest of the lowest low after hours, right? We got that initial dump to $115.01. We got it again just less than 10 minutes ago. Little 5-minute engulfing candle and a retest of $118. Tried to talk about it for a minute during the calls. That line you see on this chart here, it is this line on the daily, as you can see, manufactured as a support June 24th, July 17th, mid-July it became resistance, and at August 1st, July 31st, and then you're below that right now, and it looks like just, again, a back test after hours. What was once supposed to be support resistance has flipped to resistance. And that is all we have, and currently below it. So it is nice to see TA respected, like for real. I mean, dude, these harmonics can develop, and yeah, something like Nvidia, of course it can go to 138, like on the call. But what's wild is they beat top to bottom. They raised guidance, $50 billion buyback. Blackwell getting shipped out Q4. I mean, I don't think there would maybe like some declining profit margins maybe, but I don't think there was much of anything that warrants a sell-off. But that is a great learning lesson about earnings, not just Nvidia, anything. It doesn't matter. It doesn't matter. Because the free market obviously didn't bid on this. They sold on it, and it just happened to be after the bearish shark completed, and that D point, right? The completed shark just happened to be the third peak. 1, 2, 3, the rule of 3. I don't know how many times I've talked about it. The phenomenon, it's very real. And look, just a test, man. Oh yeah, 118, it's now resistance. Okay. Yeah, 5-minute chart, who gives a crap? It's nothing burger chart. All right, so I'm just talking about the levels and the harmonics, and we did not get the IV. We were looking for 112, 138. Well, we were pretty close. I mean, about 3% off from that. So again, just for the sake of polls, we did the poll, and it was like, all right, what's Nvidia gonna do? Is it gonna massive pump, massive dump, nothing burger? And nothing burger criteria is 5% or less. If it pumps over 5% or dumps over 5%, that's what mega dump pump means. I guess just for the sake of, hey, I was on this side of the poll. So I would say that the mega dump people won the poll. And in the Discord, that was the majority of the participants. So currently down 7% at the conclusion of the earnings call. Okay, that's what we got, man. Live stream been active 2 hours, 15 minutes. And yeah, I'm sure people fell asleep. Those earning calls, they don't do it for me, man. I don't get any sort of like excitement out of that stuff. I'm just sitting over here like trying not to go full on ADD. Went to the bathroom a couple times, and it clearly didn't do much. If anything, it hurt the price of the stock. Okay, we can look at Bitcoin before I get out of here. Good luck tomorrow. See if 118 gets recaptured. They fill that gap at 125.61 sooner or later. All right, here's your corn, your Bitcoin, just up against the key support. 2 days in a row now, tests. No real, like, though there is some demand at the inflection point, not much. Not enough to get this thing going yet. That's where you're looking to have a lower close today than you had yesterday. And yesterday was brutal, down 5.4%. Day before was down 2.2%. So it's like, that's the line in the sand for me. Okay? If that breaks, there's a good good chance we get a 7 to 10% drawdown on Bitcoin below 57.5. So just have your alerts set up, protect yourself, know the levels. That's why I go live, and we'll look at the other chart too. Yep, I mean, think about it. If they don't hold 57.5, 57.4, and it's just back to the demand line around 53 to 54K target. So I hope it holds. I'm not acting like I know if it's holding or not. I just hope it does. Just, it's gross. It's just weak. And you wonder, is it absorption of remaining demand? Is that what we have going on? Absorption of remaining demand after, quite possibly, it's not confirmed quite yet, but we'll find out soon, but is it absorption of demand at a key level after showing a sign of weakness, which that sign of weakness was buyers unable to test the supply line that was tested so many times over the past 5 months. You got to wonder if it's subtly, again, a sign of weakness in SOW. Back below the 200-day moving average, woefully, and win bids. They're not, I mean, they're just enough to keep it from collapsing. Nothing really off of that 58.4 level. Dang, man. Dang. If we're breaking 57.5, there's a good chance I might be going live whenever it is. So just be in the Discord, have your notifications on, so when I do go live at a random time, you get notified, because YouTube will fail. All right. So thanks for coming out. I'll be back. Till next time, respect. T.A. Dude, I forgot, man. You're just requesting something on an Nvidia stream after we just went through that earnings call was just so bland, and I thought we were getting some accumulation. I guess the argument's not really that invalid yet. It's just I'm starting to get weirded out because the harmonic should have played out. So this right here represents to me, can you see? This represents to me that the harmonics performed pretty bad. It performed at best with mediocrity, and then confirmed the top, and then rolled over and made a lower low than the pattern completion zone. Is just sitting here. And now what I don't like really at all is the fact that we now have this ongoing little trend here. We got these highs all up here, then we got a lower high than these highs, then these highs are all lower than this high, then lower than these highs, and now we got lower lows than these lows, and then all these highs right here are lower than these highs, all of them. So, and now you're just testing that 200 as resistance, probably hidden bear. I bet if we look at the oscillator, we could almost say there's hidden bearish divergence just looking. Well. Triple hidden bearish divergence. Right, that's one high, then the lower high, but it's an 886 lower high, which is a deep retrace, which means a lot of downside potential, easy gap fill at 351. I'm not really liking it anymore. I don't really like the harmonic performing miserably, and then now all of a sudden we're making lower lows, and now we got like terrible price action, almost triple topping up here. Yeah, I don't like it. I mean, maybe they break it to 392, but this and this, the lower high at the 200 with the hidden bearish divergence on the daily, leads me to believe quite possibly we could be going lower next. Okay. Thanks, man. Thanks.
him.